We are living in one of the craziest markets I've ever seen in my entire life, and the mixed bag that came out of these earnings reports is really throwing people in random trajectories, trying to figure out what the stock market's going to do, and they're never going to be able to predict what the market's going to do. Take everything with a grain of salt right now, because even though some of this stuff is hyper negative here, folks, that does not mean the stock market is not going to rally. This is why it's so prevalent to have a cost average investing strategy, as I have done and mentioned. Now that we've seen earnings kind of surpasses with the stocks that I love, I did in fact pick up some Google this morning. I dumped about $5,000 in, but I'm being a little cautious here because I do think we'll inevitably see some profit taking, and I'll probably continue to fill out the position, getting about $10,000 in here. It's important to note that I have over 100,000 in the position that is VOO, the S&P 500 index, that weights Google at about 4%, adding about another $4,000 or $5,000 to the position. I want Google to make up about 5 to 6% of my entire portfolio, and we're going to talk about Google earnings, why I'm starting to buy it here, but we got to talk about some of the negativity and just the insane back and forth double-edged sword life. If we're heading into a recession, are we not heading into a recession? Walmart said consumers are spending way less money. That was horrifying. GM saw incredible margins get slashed, their net income just absolutely devastated. Coca-Cola was one of the few companies yesterday to post reasonable numbers, and even McDonald's, even though posting very robust numbers, had to increase prices to keep the rate of growth moving forward, right? So there was a lot of mixed news. Even UPS was bringing Amazon down because the volume was drying up. There's a lot of indicators saying, hey, we're probably heading into a recession, but then Alphabet, Microsoft, Visa posted numbers that blew my freaking mind. I mean, take a look at Visa stock. It trades at a healthy premium here, so it hasn't really rallied off of the news that it posted, but the earnings, I could not wrap my head around how their revenue grew 19%, their GAAP net income up 32% here, folks. How is that possible? People must be spending money like crazy, maybe putting themselves in debt. I have to really dive down into the Visa earnings because I was not anticipating that, right? We had Shopify post this morning, and a lot of people were like, oh no, the Shopify, oh my God, it posted horrible numbers. Take a look. I mean, its EPS was down rapidly. The revenues were down. All of it missed analyst expectation, yet the stock was still up 5% today. And why? Because they're still seeing growth across the board. This is what we saw with Microsoft. This is what we saw with Google. Just taking a quick briefing, the gross profit here, guys, at $1.2 billion. All of these numbers just keep driving toward the fact that these internet software companies, even in these tumultuous times over the insane growth from last year, though the growth rates have dropped, though the margins have dropped, so they're even laying off 10% of their staff. A lot of companies going into hiring freezes. So we're getting this double-edged sword game. But what this is doing is making the fundamentals of Shopify even better for the next bull market, which again could be anywhere from 3, 6, 12 months. Who the hell knows? But this company is going to come back, and it is going to be a profit machine. And right now, these companies are just refining through these tumultuous times. But to get growth in a market like this is kind of mind-boggling to me, even if it's slowed growth and margins are getting hit, which is something that we're kind of seeing with Google, right? Google's up 6.65% right now. And taking a look, guys, they missed again on reported EPS. They missed on revenue against analyst expectations, and yet the stock still rallied, which is again starts to annoy people because again, stocks do not always trade off earnings. You can post bad numbers and rally. I've mentioned this before. Things get so suppressed. All these shorts, all this negativity has a self-fulfilled prophecy where inevitably, no matter how bad the news is, stocks will start having a hard time going down. So don't get caught up in the salty media, right? But take a look at this revenue growth because it is still pretty pronounced, right? Going from 61 billion to 69 billion for the quarter, but operating margins are starting to dwindle a little bit here. But the fact of the matter is considering advertising has still strong spending habits, which again are degrading and could potentially degrade into the next quarter as well. We're not out of the woods here yet, but again, almost every segment of their entire platform has seen growth. I mean, cloud grew just wonderfully, right? Like from 4.6 billion to 6.2 billion. We saw this with Microsoft's Azure. Their cloud computing segment grew very dramatically here as well. So there's still a lot of incredible growth segments, right? So yeah, I love Google, guys. Google proved to me that, hey, if we can get through these bad times and still be posting numbers like this, when we get back to good times, these numbers are going to get even more pronounced. And I think Google anywhere below 110 is fair value or cheap. Anything at $100 is insanely cheap. I'm just playing it slowly here because again, there's you cost average. I don't want to rush in and just lump sum in a market that's this volatile, right? So tonight we're going to get my other beauty, my gem, my Facebook stock. And I was rocking it hard last night, playing with that Oculus, getting into that VR. I mean, take a look at how pumped I was for these earnings tonight. So Meta is just rallying with the rest of the market today, guys. I mean, up 5.54%. And again, I would suspect that we are eventually going to see some profit taking, but because of how suppressed Meta is, I don't think any numbers they're going to post tonight are going to be bad enough to really sink the stock in any negative way. In fact, if this is the way the market is reacting, if they post even moderately good numbers like everyone else has been posting in the tech world, this thing needs to come up to at least a 15 PE. I wouldn't be surprised, if we end up back in the 180s to $200 range area. So I'm going to be fixated on that and going live tonight, which you can join me when these earnings drop at my live stream channel. Again, leaving that link in the description below here, folks. And then finally, just taking a look at the broader markets, because the big gems that are really going to show a shining light on the market is going to be Apple, is going to be Amazon. So those are the ones that we're going to be paying attention to tomorrow. But again, we also get the Federal Reserve meeting in the midst of this to really prove out if we are in a true recession or not. But taking a look here, folks, what a day. I mean, my portfolio is up dramatically. It's over 350,000 in net worth again with all my combined assets here. Crypto's rallying, but again, we're still in these suppressed areas. It's nice seeing these 5% bumps, but we're still down dramatically from the all-time high here, folks. But I want to pass the question off to you. How is earnings sinking in for you? Are you taking advantage of some of these dips right now? I hope you're cost averaging, even if it's just into those index funds, as I continue to with VDY, my Canadian dividend stocks, which by the way are going to be posting earnings coming up here. We did see some out of like Northland Power, some of the utilities that were very good, but I'm going to cover a lot of this in the coming weeks, because unfortunately the banks, the REITs, they don't really post until August, toward the end of this month as well. So I'm going to bring that to you on this wonderful channel. So consider subscribing, folks, but stay cool, stay awesome. And as always, I look forward to catching you in the next one.